Hey everybody, I have a really exciting program to talk about today, Rate Portfolio. It's our own internal portfolio lending product that we have available to our clients. Jason Evans here, loan officer with Rate. My NMLS number is 21205. I'm licensed in 26 states throughout the country, and I am located right here in Massachusetts. So with Rate Portfolio, what we came up with is a lending program that goes beyond traditional guidelines. So most lenders and banks can offer the standard products, which are loans backed by Fannie Mae and Freddie Mac or FHA. There's very standard jumbo guidelines that most people can offer. What we do is we go outside of that. We offer all those programs, but we have an alternative option as well with our portfolio lending. So with this, we have specific guidelines that are able to address areas that people sometimes have trouble qualifying in. This includes loans for investment properties, non-warrantable condos, loans for people that don't have any current employment income, but they have a lot of assets in the bank. We have asset-backed loans. We have loans for short-term rental properties for investors that want to own residential properties in an LLC. People with really high debt ratios, we can handle that with our portfolio lending options. And a number of other things, including some really great options for self-employed borrowers as well. So I'm going to touch base quickly on these areas so you know a little more about what I can do to help and qualify you for under our portfolio lending options. So first of all, for investors, some really good options here, including if you want to buy a home but you don't want to go through all your personal documentation for your income and your debts. Maybe you own several businesses or you have several rental properties, or you just don't want to deal with all that standard paperwork required. With our portfolio program, we can qualify you for your rental property solely based on your assets for the down payment and the fact that the rental property will be cash flow positive. So that's the rental income on the home you're buying, covers your mortgage expense, your property taxes, and your home insurance for it. So as long as that's the case, we can qualify you for it. We don't get into your personal income or your personal debts. Also, like I mentioned, we'll let you own the home in an LLC that you are the owner of. So typically with residential mortgages, you need to own the home in your individual name, or sometimes you're allowed to put it in a trust. We'll let you own it with your business, which is pretty unique. We'll also give you the option of buying down the interest rate by including a prepayment penalty on your loan. So if you know you're going to own this home long term, depending on the state you're buying in, as long as it's allowed by law, we can have up to a 5-year prepayment penalty, which will help you get a lower rate for the life of your loan. We'll also do the rental calculation based on short-term rentals if that's how you're going to use the property. So we have that option as well. It doesn't have to be a long-term rental that we're doing the underwriting calculation based on. Say you are trying to buy a home, but your debt ratios are very high for whatever reason. You know, for jumbo loans, traditionally, you're not allowed to go over 43% for a debt to income ratio. With our portfolio program, we can go up to 55% in a lot of cases. So this gives you greatly expanded buying power. Say you have a lot of money in the bank, but you don't have any job currently. You don't have any incoming income, but you're living off your assets. Traditionally, you'd have a really hard time getting a mortgage. The banks want to see the cash flow coming in to support your monthly debts. Well, step in with Rate Portfolio, and we can do it for you just based on your financial assets. We don't care if you don't have income. We'll do an income qualifying calculation based on your financial strength and the assets you have in the bank. We'll take your qualifying assets after accounting for what you need to buy the new home, for your down payment and closing costs, and we'll divide that number by 84, and we'll use that as your qualifying income. So this is a pretty unique program. A lot of times banks would flat out deny you if you don't have any income. So that's a great option for people in that scenario. Say you're self-employed and you're having trouble qualifying based on traditional guidelines. We have a few alternative ways to look at your income to qualify you. One, if you're a 1099 employee, you're earning 1099 income, we can either confirm with your employer that you don't have any job-related expenses, and we'll take 100% of your 1099 income history, and that can just be for 1 year even, or we will look at a 10% expense factor and apply that towards your 1099 total and use that as your qualifying income. We don't even look at your tax returns. If you're a business and you have really strong cash flow coming through your business, but we can do an income calculation based on the cash flow coming through your business. We can either look at back for 12 or 24 months of your business bank statements for that. Say you have tax returns that you're filing and you want to use just the most recent 1-year tax return, where traditional guidelines call for 2 years, we'll allow it to just look at the most recent 1 year. So there's a lot of different ways we can qualify you outside of the initial box that traditional underwriting will set for you, and we'll get creative to see alternative ways we can document your income to help you to qualify if you're self-employed. Say you want to purchase a home as a condominium and you keep on getting told no, even though you have no problem qualifying personally, the condo doesn't meet certain set traditional guidelines that banks set. Well, we can think outside the box on condos, and we have expanded guidelines for the condominium to qualify it, even if it's outside of the traditional ways that banks will look at qualifying them. So these are non-warrantable condos. Our portfolio program has options for that as well. Another scenario we're seeing a lot of right now is somebody owns a home, they want to buy another home, and they want to move into the new home and then sell their current home after. We have some great buy before you sell options with our portfolio program that would help you to qualify where traditionally you probably wouldn't qualify to own both homes for a short period of time. So we have some great financing solutions for that as well. So all of these come under Rate Portfolio, which I'm able to offer my clients, like I said, throughout 26 states in the country. I am based right here in Massachusetts, and it's been a huge help for my clients being able to buy homes because we're able to qualify more people and not just have to tell them no because they don't qualify for the strict set of guidelines that are traditionally set by the government and traditional jumbo loans. So these are all great options. I'm happy to offer them to my clients and go into more detail for any specific program you're trying to qualify for and see what we can do to help out and get you your next home. Or this can also work for refinancing as well. If you already own a home and you're trying to refinance it, either with cash out or trying to save money with a different rate. So give me a call, go to my website, www.jasongr.com to start your application, and I'll apply our portfolio lending guidelines to your application and see what we can qualify you for.